excited to hear about fundraising, but from a VC standpoint. Amazing. So we have Ashim from Octerra Ventures, and we have Oyin from Techstars, and I'll probably say like Techstars Lagos. I will let them have the mic, share a little bit about themselves and about their company, and then we'll get right into questions. Ashim, you want to start?
All right. Ooh, yay. I need to moderate my voice. I have a very loud voice generally, so I shall try. Hi, everybody. See what I mean? It's nice to be here today. Thank you for joining us. My name is Ashim Egunjobi. I'm the managing partner at Octerra Capital. We are an early stage venture capital fund, and we invest primarily in tech startups across Africa.
A little bit about yourself.
Oh, about myself. Ooh, okay. So first off, my main job is that I'm a mother of two. So that is my main hat. I wear many hats, but I always say the most important one I wear and the most important job I have is that I'm a mom. As a side gig, I run Octerra Capital. I am also an active angel investor, so I actually sit on the exco of Rising Tide Africa, which is an all-female angel investor network. Prior to venturing into venture capital, I used to be in banking, so I used to work with Standard Chartered Bank. After that, I was working in a private equity fund. And then I decided that life was not interesting enough, and I decided to join a tech company. So this was actually a tech company that's a multinational company, and that's the company that Damilola from Shutlers mentioned. So I used to be the acting country manager at Tech Experts, and we were one of Damilola's biggest customers with over 1,000 of our employees on their buses. So yeah, I've had a little bit of a diverse career, and I think there's a great saying coined by Steve Jobs, which is sometimes you can only connect the dots backwards, which means that sometimes you don't know the experiences that you're gaining in life and how valuable they will be to something later in life. So all of the experiences across my career have, I suppose, culminated in what I do today and where I am. Thanks for having me.
Amazing. Now, Oyin, thank you.
Hi, everyone. So I'm Oyin Solebo. I'm the managing director of Techstars in Lagos. So it's the ARM Labs Lagos Techstars Accelerator. So it's in partnership with ARM, which is Nigeria's largest non-banking financial institution. So Techstars is the most active early stage investor in the world and the most active early stage investor in Africa. So super proud of that because we talk about capital dwindling, etc., but we are still making dozens of investments on the African continent every year. I run an accelerator program here in Lagos where we invest in startups and then put them through a 3-month boot camp. So like one of the founders previously was speaking, the benefit of having an accelerator program is you're not just getting capital, but you're getting active support to build your business and community and network and mentorship, etc. We are relatively sector agnostic. So this year we've invested in fintech, e-commerce, energy, health, and future of work. And my background, before I joined Techstars, I was a founder. So I was a founder for about 8 years. So I have a lot of empathy with founders about the challenges that we have. And I started my career in investment banking in the UK, hence the accent.
Amazing. Awesome. So today, in today's panel, we want to hear from investors' perspective, which is pretty much raising capital in a challenging environment. We had an amazing panel with founders, and we heard their side of the story. I do want to just ask the investors, what has been your personal experience in the last year as you were thinking about deploying capital and also making investment? What are some of the things that you have seen in 2023 in the current climate and in your personal experience? Let's start with that.
I think it's a great question. I think look, we all know that 2023 has been a year fraught with macroeconomic headwinds, in Africa especially, inflationary pressures, currency devaluations. By the way, it's not a Nigeria thing, okay?
Everywhere.
We have actually had currency devaluations across a number of big key markets on the continent. Egypt, Kenya, that used to be stable, has had their own, challenges. We've had Nigeria, obviously, as a big one recently. And so, all of those headwinds have really, I suppose, led to a downturn, or what would be, themed as a downturn. Now, the secret in a downturn is always, what are the lessons that you learn from it? So are you, what's your mindset? Do you have a growth mindset around it? And are you looking to say, okay, well, how do I position my business in a way that, A, we stay alive? And I think, this is probably the most important message that anybody should take away from the previous panel of the founders. Ensure that you stay alive and figure out what's going to keep you alive. Is it your customers, recurring revenue? What's your cash runway look like? Cash management, i.e., what does my operational overheads look like, and where can I cut? Because sometimes you gotta cut, and be creative around that as well. So 2023 certainly was a year where there were a lot of challenges and pressures on founders, especially with regards to attracting capital, outside capital by investors. Now, at Octerra Capital, we always take a pretty long-term view. So to us, our startup companies that we invest in, we really look at it like a partnership. It's not so much, we write a ticket and then you never see us again until we want to exit. But this is really around, well, how do we build successful companies? We have an impact mandate at Octerra, so we're not just here to make money, but we actually want to ensure that, as a continent, we come, out of this into the next sort of decade much stronger, building prosperity and long-term prosperity. So I think, for us, the key has been looking at companies that, A, solve a real challenge. And, the interesting thing is that we've sometimes got to be really honest with ourselves. You can have a beautiful pitch deck. You talk to me about the total addressable market of multiple $1 billion. And I'm thinking, okay, great, but where's the data from? Can you really talk around what that market sizing looks like? And why do you think that is the market size? Do you know what the GDP per capita is in Nigeria? Trick question. Anybody? Probably not, right? Because oftentimes we say, oh, but Nigeria is a huge market, 200 million people. Yeah, sure. But how many of those 200 million people can, in fact, actually afford your product or your solution? If you're a B2C, sort of business model company, okay, how many of those customers are going to be in your real target demographic? So we've got to be really honest with ourselves when we're building companies so that we can ensure that we actually are able to attract and speak the language of investors. I think that sometimes there is a misconception that as investors, money comes easy to us, right? So it's always great when investment funds close rounds. They mentioned earlier on the panel as well, there's been a few funds that have closed, but guess what? There's a lot of funds that are raising and they're not finding it easy raising. Not because the model doesn't make sense, but because at the moment there's just a lot of headwinds. So, investors alike are also being extremely careful to say, the companies that I'm investing in, are these the companies that we think are going to have this high growth VC, model that will support it? And it's important that you also understand who your investors are. And this is going to be the last point I'm going to make, because, if you're a tech company, go look at investors who invest in tech. Don't go speak to an investor who normally invests in manufacturing. There's just a mismatch from the beginning, right? So if you're going to come to me and you tell me that you have a farm in Abeokuta, okay, great for you, right? But it's just not my business model unless I can see that there is real proprietary tech in what you're building. And if it's not, I may be able to refer you to somebody, but I may not be your investor. If you are a female founder, and we have a few in the room today, I hope, look at some of those female-friendly VCs, okay? And typically, if you do a little bit of homework, you will be able to find out, do they have a gender lens in their mandate? Do they speak about that? Do they have female-founded companies in their portfolio? Most investors have their portfolio on their websites, right? So you got to do your homework a little bit so that you make sure that there is a closer match when you do go and pitch, and hopefully you have a higher success rate as well.
Woo!
A lot.
So what have I seen in the last year?
Yeah.
The pressure for founders has definitely gotten worse. It's not been a joke. But the reality is, I think it needed to happen. I think there were far too many founders that were raising at ridiculous valuations for nice ideas that weren't solving fundamental challenges and problems, and we need to kind of go back to basics. So what I've seen for founders, my founders have gone on to fundraise after joining the program. It's taken a lot longer than they thought. Yeah. And the kind of questions they're being asked by VCs are not the kind of questions they were expecting based on what the founders were being asked the year before. So this year, regardless of the stage you're investing, an investor is more likely to look for those indications of product market fit. And what does that really mean? We throw around product market fit, and I think a lot of people don't really understand what it means. But it's the idea that you are building something that has an unmanageable level of demand for. You're building something that you can't build fast enough in order for your customers to pick up, right? So if you think about what kind of metrics are behind that, it's metrics of exponential growth in value. So is your revenue going up double figure percentages month on month? Have you got good retention? You know, it's all good having customers come and go, and a lot of people talk about users, but then when you ask about active users, it's not a great number. And when you talk about retention, i.e. how many customers are coming back month on month or quarter on quarter, it's not great. And until you've got that, you don't have a good indication of product market fit. And then what are your customers saying? You know, if you do a survey on them, if you do an NPS, a Net Promoter Score, are the majority of them likely to recommend your product, yes or no? So unless you have those three indications, you don't have product market fit, and it's just going to be harder for you to fundraise regardless of the stage that you're at. So we used to talk about team when we were investing at the early stage. And the idea was that if you invest in a great team, really smart, domain expertise, grit, etc., they'll figure it out. But now it's team interaction, really. It's what indications have you got that customers not only will use, but actually will buy and sustainably and repeatedly buy your product or service. So it's definitely harder. So it means that founders need to be a lot more on top of their numbers and the metrics that demonstrate that they are on the path to product market fit and profitability.
Wow, that's amazing. And this is a very yes or no answer because, and I think Ashim, you did mention this. I think what a lot of founders don't realize is that VCs also have to go out and fundraise, and a lot of us, including Ajim Capital, are out there hustling to get capital for our founders. Is Techstars still deploying capital as of today?
Yeah, we are. So my program is in partnership with ARM. So luckily we have the mandate for another fund after this. So we will be deploying capital next year as well. Techstars globally, for the programs that aren't in corporate partnership, we still have a fund to deploy capital. So and we're still very big on Africa. So I very much expect that. Actually, I hope that we will still be the most active investor in Africa next year as well. But you're absolutely right. We need to fundraise in order to continue deploying capital. And as tricky as it has become for the founders, because they need to demonstrate the return on investment to us, we also need to demonstrate the return on the investment to our LPs. So there are a lot of similarities. Like it kind of feels like we're on opposite sides of the table sometimes, but we all have to kind of report to someone about the return on that investment. So that's why that founder and VC relationship is so important.
Yeah, I mean, and I don't think a lot of founders really understand that aspect of our job, that we also go out and fundraise. And if we don't have the right resources, and I mean, even in this climate when things are hard, right, like it also challenging for us to get that money. But Ashim, I'm curious to hear your perspective on are you guys deploying capital right now, or are you still in the fundraising mode?
Both, actually. So we're still deploying from Fund 1, and we're actively raising Fund 2, which is the $100 million fund. We have high ambitions, but the reason being that we have found that about 77% of the capital that was invested in 2022 came from foreign investors. So just let that sink in for a moment, okay?
And the percentage again?
77%, so almost 80%. And while that is not a bad thing per se, the question is, knowing the history of Africa, knowing the history of where capital historically has always sat, what does that mean for what we're building and the technology we're building, the control that we have or don't have on the continent as founders and as investors. So we have taken the bold step to say we're raising a much bigger vehicle so that we can, in fact, try and, reduce the, that percentage and say, yes, there are more indigenous-led funds that are, in fact, deploying capital with bigger check sizes, okay? Because, yes, we have a lot of micro funds on the continent, a lot, probably more than in most other markets, to be honest. We have a lot of angel networks across the continent, We have multiple in Nigeria, Lagos Angels, RTA, Port Harcourt, Abuja. We have a lot in Nigeria alone. We have the ones in Francophone West Africa. We have the Kenya Angels. We have multiple in South Africa. We have in Tunisia, in Egypt, in Morocco. But it's just not sufficient, right? So we have so much innovation. We have so much talent. We want to make sure that we're actually able to ensure that a lot of that support is being given to founders by indigenously led funds, right? So we're in a mix of both, but we're still deploying. And I think one of the things that I did want to say is that sometimes what goes missing in the number of how active a fund is the follow-on tickets. And that is something that is really important. And, as an investor myself and an investor who's done a couple of follow-ons in our own portfolio. So a follow-on is typically when you've invested in a company, they're in your portfolio and they're now having another round and you're following on your initial ticket in that round. So what you're doing is you're doubling down on your commitment, right? And it's really important, one, because new investors want to see that existing investors actually are committed to the company, i.e., hey, we still believe in what you're building and we're going to put our money there. But also because a lot of these companies, as you all know, have struggled to fundraise, not because they don't have product market fit, not because they don't have a great team, but simply because capital is scarce, right? Dry powder has retracted. We're currently tracking half of what has been deployed in Africa last year. So you've got to make sure that you also follow on in your investment. So we've done quite a number of follow-ons this year, actually, but we've also dabbled in a couple of new asset classes, such as venture debt, which comes, at a bigger appetite this year for a lot of founders, especially.
And I mean, when I asked the founders earlier, like what are other sorts of funding, they mentioned venture debt. So it's like super, super helpful, especially in the African context where out of the bat, equity money is scarce. I know we have a big audience of female founders in the room. And I remember, like in our last panel, they gave very tactical advice on fundraising. But from an investor standpoint, what are some practical advice you can offer to the female founders in the room as they think about fundraising in this current climate, but also beyond 2023?
I think someone made a comment around, as a business, you go for your customers, so you should expect the VC to come to you. No. I got over 1,000 applications for my Accelerator program last year, and I can take 12, right? So it's really, really important that founders put themselves out there.
Yeah.
And I think there are, when we talk about females being underfunded, there are kind of institutional reasons why we don't get funded. Well, there are biases, there's lack of information that reaches us, but there's also, on the other side, things that we as female founders, and I say we because I was a female founder, right, can do. If I go to a conference and there is a female founder in the room and a male founder in the room, most likely that male founder is going to approach me, and within 5 minutes, he's asked me for my number, my email address, he's connected with me on LinkedIn, he's tried to send me his pitch deck, and then he's hassling me. Whereas the female founder is more likely to be like, hey, this is my name, this is my company, and walk away. And I have to be like, can you come and sit down and tell me who you are? Tell me about your business. Tell me about your vision. We need to put ourselves out there more. right? And it's challenging. There's so much data to talk around the fact that as a woman, if you're applying for a job, you typically wait until you're 110% ready. A man will apply for a job when he's 40% ready and tell you why he's the best person for the job, right? So we need to have a lot more confidence in ourselves and put ourselves a lot more forward. Last year, we had around 95% of our applications were from male CEOs, and we ended up with a 50% female CEO class. Why? Well, number one, we went out there and we looked for them, but number two, they were just generally better and ready and more prepared, because again, the male founder was more likely to put himself forward when he wasn't ready. So that's my first piece of advice for female founders. Like, we need to put ourselves out there a lot more. The second practical advice for male or female, I would say, is be really deliberate about your fundraise. Fundraising is not sexy. It's not fun. It's not something that founders enjoy doing. I think a couple of years ago, there was so much glamour around fundraising and I've just closed a round. It's not fun. Like, it's a full-time job. So you need to be really deliberate about it. And what I tell my founders to do is you need to have a CRM, right? You need to have like a customer relationship management spreadsheet tool, whatever it is, that treats this like you're going after sales targets. You need to understand who this investor is, who is the partner, who should you be speaking to, what is their process, do they have capital, what stage do they invest in, what industry do they invest in. If you don't know the answer to all of these, do not waste your time approaching that investor, because your time is precious and their time is precious as well. So be really deliberate about who you're investing in. Who you're investing your time in. And then be really clear about their process and ask the investor up front. You know, you ask Ashim, what is your process? And Ashim may be able to tell you, okay, there are 5 stages in our process. We're going to ask for this, this, and this. It should take 6 months. You will speak to an associate and then you'll speak to the partner. If you then go off process, you know that something is up, right? You know that maybe they're not interested. You know that maybe the analyst is doing some market research through their conversation with you. But ask those questions up front so that you can be able to know whether or not your time is being wasted. A quick no is so much better than a long no. So try to get to know really, really quickly so that you can spend your time on the investors that are more relevant. And the last thing I would say, because I'm sure I don't want to take everything, is be really prepared, right? So from the minute you're speaking to investors, make sure your data room is ready. I've had founders that I've introduced to investors, and then months later, the investor is still waiting for them to finish their financial model. They've wasted that opportunity, right? So make sure you're ready. Make sure all your data room is complete. You have your financial model. You have your incorporation properly done, properly structured, so the investor can even actually invest in your company in a legal way, so that process is a lot smoother.
Amazing.
I hope you guys were writing this down, huh?
I know.
Because I wish I had my notebook out. As an investor, I'm like, ooh, let me take some notes. Just add, first of all, be outcome focused. So what is the outcome that you're looking for? It cannot be, I'm trying to close my round, due respect. It cannot be. That should not be the goal that you're striving for. You should be looking at, okay, what is this money going to do for me? If that is the outcome with which you're going fundraising, you're having very different conversations, right? Because one of the key questions that every investor, will ask you is use of proceeds. I give you this money, what you going to do with it? And it's not good enough to say, oh, 20% is going to go to marketing, 25% is going to go to tech. I can care less. Break it down for me. What does tech mean? How much are you going to spend? Who are you going to hire? Have you identified the people? Break it down. Oh, I want to expand into Gambia. Okay, great. Have you done market research in Gambia? No. Okay, but I have a cousin there. That's why I thought it was a good... My friend, you're not ready. Okay, so outcome focus is so key. Understand what is the outcome that you're driving for. Second, be afraid, but do it anyway. Okay? And I'm sure you've all, heard this term before, but it's really, really key, especially for women, maybe for men as well. But to Oyin's point, data points to the fact that women oftentimes are not as aggressive when it comes to putting themselves out there. So yes, you may feel nervous, you may feel anxious, you may feel like you're not ready. And all of that is valid, but just do it anyway. Have the conversation, which is why earlier I said find founder-friendly and female-friendly VCs, because those will be easier to talk to. Find yourself somebody who maybe is an angel, even if they don't invest. They will be so valuable in reviewing your business model and looking at your strategy. Just get like as much free advice as you can get, right? But also take every conversation that you have with your notebook, okay? So make sure that you're actually learning from the conversation. So if you're having a quick or a long no from an investor, make sure that you actually understand what were the reasons behind it. Don't take a no and just walk away. You didn't understand why they didn't invest. Maybe they didn't have money, but they really liked you. But you didn't ask. So you don't know that you need to come back in 3 months when they now have money. Maybe they say, you know what, we just saw too many gaps, right? Your annual returns weren't filed. I could see your CAC status was not active. You know, I mean, we do our checks, right? So you got to make sure, ask. Even if you're afraid to ask, it's okay. Ask. So be afraid, do it anyway. And last one, and this is for the women in the room especially. Don't leave the room before you've left the room. And I'll try and explain. So I don't know if you guys read this book by Sheryl Sandberg. It's called Lean In. And I read this book when she first published it, which I want to say was probably, please don't quote me, 2012, 2011, 2013, something like that, right? It's been a while, 10 years ago-ish. Now, this is one of the chapters she actually has in the book, and she narrates a story of an employee she had who she thought was brilliant and she wanted to offer a promotion to. And while she was engaging this employee, the lady sort of, you know, you could see she was stepping back from the opportunity, only for Sheryl to later understand from the lady that, oh, she was planning a family. She had not planned the family, oh. She didn't have the baby. She was planning. So she had removed herself from the opportunity to even get a promotion, to be considered, because she had thought that she would not be able to do it. She didn't wait and find out, once I have this baby, can I do it? Maybe the answer is, look, I can't. It's too much for me. And that's okay. But allow yourself the opportunity to find out. Don't rob yourself of the opportunity that you may have gotten. So really important, guys. Don't leave, or girls, you know, don't leave the room before you've left the room, okay? Don't shut the door before it was ever even properly open, okay? I see a few women here with their babies. I commend you. I think it's amazing. We need more spaces like this.
Clap for yourselves, please.
It is, I love it, honestly. We need to see more of that, okay? And anybody who's offended by that, by all means, I beg, just, you know, pack somewhere. Because, look, I can't hide the fact that I have kids, and I shouldn't have to. So as a woman, and you're in front of investors, and they're asking you funny questions, it's okay. Answer the question. In fact, preempt the question. There's a reason why I introduced myself as a mother first. Because nobody must be under the impression that my time is not valuable. It is okay to have other priorities, such as family. But the question is, how do you strategize around it? How do you show people that you are competent and capable beyond what you may be, i.e. a mother or, you know, a wife or whatever, right? So really important that you are clear, crystal clear around, you know, look, I'm here to stay. This is the opportunity that I see. I want to take it. Yes, I have children, but guess what? I have a great support network. Yes, I can fly around the world and fundraise. I have a little baby. I'm going to take her with me. I have a founder. She carries a 6-month-old daughter with her, and we invested in her. No problem. Be upfront around it. Have a strategy around it. Own your space. Don't leave the room before you've left.
Oh my gosh.
Sorry, I'm very passionate about this.
I have chills just hearing or listening to Ashim right now. You want to add something?
Yeah, I love Ajim. But I wanted to pick up on something you said about the fear factor and about getting feedback and how important that is. There's another piece of research that talks about women taking negative feedback a lot more personally than men take. So we don't like negative feedback. But my career changed when I decided to take negative feedback as a weapon. You've told me something that doesn't work. Brilliant. That's something that I'm going to use to work on and improve myself and then be a lot better next time. I've invested in 2 or 3 companies that I originally said no to. I said no to, they took feedback calls, they added me to their investment updates, they called me to say, hey, you told me you didn't like this thing, we've now changed our business model, we've done X, Y, and Z. I said, I want to talk to you, and I ended up investing. So take negative feedback as a weapon. Say, thank you very much for that, I'm going to use that and do something with it. Don't take it as something that to shy away from.
Can we have one more round of applause for the 2 panelists today? I honestly had one more question, but I think Ashim dropped the mic. So we don't need any more. I think some of the advice that she gave me so much chill, because I think as women founders, we are always told we can, and I don't even think people tell us that. I think we just pretty much rationalize things in our mind on why we shouldn't be in the room and why we shouldn't have a seat at the table, when we need all of our perspectives are valued. If I told you how many times, and I'm sure a lot of the women on this stage can relate to that, how many times I have been told no for one reason or the other, and I still showed up. In fact, my nickname is showing up. That's what I still show up, regardless of whether I am not feeling like it, whether I feel like I'm left out, whether I'm the only woman in the room, I still show up. And I think a lot of the times, and I heard another founder mention this earlier, where they say, oh, because I am a woman, I can't do this, or that's why I didn't get the funding. And I always tell myself, because I'm the woman, that's why I'm going to get the funding. Because I know they need that diversity in their cap table. Because I'm a woman, I stand out. And when I show up, you will know I am there. You know what I mean? And I don't show up like that. I show up with my bright colors. You guys have that was needed. It needed me to shut up. I don't show up cool. I show up as I want to be shown up. I show up the way I want to be addressed. I don't show up to a meeting in a t-shirt, and you know what I mean? I show up because I want you guys to respect me, and I want you to respect my company. And I think the more we switch the flip, we just flip it and say, you know what, I deserve to be in this room, and I'm showing up because I have an amazing idea, and we're both going to make a lot of money, you will stop feeling like you're not getting the funding because you're a woman. All right. We are going to get questions from the audience.
Before we get questions, please a round of applause for them. This has been so amazing. Thank you so much, Ashim. Thank you so much, Oyin. All right, question.
Thank you. My name is Olajumoke Oduwole. I'm CEO and co-founder of Alajo app. I wanted to introduce myself because I've met every woman on the panel, and thank you for the advice, because one of the things I learned recently is that when an investor says no, doesn't mean that it's a no forever. And sincerely, I learned it recently at Jitex Global. I met Ajim when we were very early. I don't think I've met them again, but I keep meeting Kelvin all the time. And then I met Octerra, middle of Alajo B2C, and I met Techstars B2B. We didn't enter Techstars, and I'm going to ask why today, but hopefully, hopefully I get a response. But my question is, so I'm a founder and 10 years an entrepreneur by next year. I'm proud of that because I started very young at 23. And my first company just crossed the mark of $1 million revenue this year. And we are very proud of that. I'm selling myself so that you can be reminded that you should still invest in me, because I will turn your money into $10 million soon. But then my question is, what is so distinct about the people, the founders that you invest in? So I'm naturally very reserved because I started as a developer. I'm just trying to come out now. And my co-founder is more reserved. She's here, and today is her birthday. And you're like this, she's at the back, you see? She's at the back. So I would introduce her to Ajim today. So please, the question is, what is so different about the founders that you invest in? And what can we do better, since you've met us, already? Thank you.
Thank you so much for the the question, and it's nice to see you. So I don't think there's a problem with being reserved. I don't think that you have to be out of character in order to achieve your goal. And anybody who tells you otherwise, I would argue is mistaken. I think if you show up with your true self, that's always more valuable. It's probably not about the founders per se. Oftentimes it's about what's the appetite I have at any given moment, right? Which is why it's really important also to speak to a number of different investors. So some investors are fintech investors, and that's all they do, right? So it doesn't matter how many fintechs they have in their portfolio, they will keep investing in fintechs. We're sector agnostic. So the minute I see my portfolio is a little too skewed than I'd like, I need to put on the brakes, right? And I need to say, okay, the next check, if I have two that I could choose from, most likely is going to go into a different sector than fintech. So this is just like, it may not be about, oh, what are the founders? What do they have that I don't have kind of thing, right? Sometimes it's, as a VC or as an investor, what am I looking for in that given moment? It could also be around, is the business model one that we at this point subscribe to, i.e. do we think that in this current shape that you are constituted, that you are designing, that you're strategizing, your go-to-market strategy, the way your tech is built, do we believe that this is the company that will in fact scale, right? I don't want to say unicorn because, that's great, but in the end of the day, scalability is not just measured by whether or not you have a $1 billion valuation, okay? So, different things. So I think really important to not, as Oyin said, I personalize it, but more around seek the feedback around, okay, we got to know, or we got to not now, what is it that we can do in order to potentially get a yes, okay? If you're just not interested in investing in the type of business I'm building, okay, then that's just a different thing, right? But get the feedback based on the company. I think you're a wonderful person, so stay the way you are.
Okay.
Can I just address the reserved
Okay,
thing?
sure.
First, did you apply this year? Okay, I'll talk after. Anyway, the reserved thing. I'm an introvert. I do not like parties. The idea of loads of people coming talking to me after this makes me a little bit nervous. I don't like crowds, but I'm passionate about what I do, so I'm comfortable coming up here and talking about women in tech, VC, because I'm passionate about it. So I think for those of us that are reserved, those of us that are introverted, we do need to, I think, unfortunately, find a way to still put ourselves out there, because as the founder of your business, you are your chief communication officer. You are your first salesperson, both to your customers and to VCs. So you need to find a way really to put yourself out there in an authentic way. And I see you on LinkedIn. I see you doing your thought leadership posts. That's an amazing way for you to make yourself visible. And it's the same with me. If you go to my Instagram page, I've got maybe 9 pictures on there. And for me, that's enough. I just think it's really, really awkward and weird. But on LinkedIn, I'm vocal because I use that as my authentic platform to talk about what I'm actually passionate about. So yeah, we need to, as female founders, we need to find a way to be visible and vocal, because as I said before, the VC is not always going to come to you. You need to make yourself very visible to them.
All right, thank you.
I just dropped my notebook. Good morning or good afternoon. My name is Lindsay Ellison. I'm the co-founder of DiagnoStar. I also work with the Africa FinTech Summit, so I have a lot of experience kind of connecting. Unfortunately, it's the FinTech Summit, and I'm in health tech. But I have a lot of experience kind of being the go-between with investors and startups. And I mean, you mentioned that it's important to be prepared, which really set a tone and really look at that target market. But first, they have to get your attention. And like I said, I've watched sometimes investors going, oh God, 1 million people are going to come up to me and things like that. And they're like, don't tell them I'm here. And you get 1 million, you said you got 1,000 and you chose 12. How do I stand out at that very first thing? How am I not that annoying guy that's giving you all that information? Is there something, even pitch decks? I recently showed, you guys know Lexi, I showed it to her. She was like, I don't like that you reorganized this. I always want it in the exact same way because I know what I'm looking for. And I thought, oh, well, put the team first. We're a great team. So she looks at all the investment decks the same. They all look the same. I asked her, does it matter if it's really well designed? She says, I don't care about that. But I still have to catch your attention. So when I'm in this room today, how do I catch your attention? Or when you're looking at 50,000 pitch decks, how do I catch your attention?
First of all, I think you already have, so well done. To the point, I mentioned that I used to work in banking, and I had an amazing MD. Her name is Bola Adeshola. She has built a stellar career. Look her up. She's a female champion, non-compare. One thing she always said, if you're in a room, ask a question. Even if you don't know what you want to ask, put your hand up. By the time the mic comes to you, the question will come to you. It is, and it doesn't matter how small or big the room is. Sorry. If it's 5 people in the room, or if it's 200, 500, 1,000, put your hand up. Because one, you get people's attention. So I already know what your company name is. I know what your name is, and I also know what sector your company is active in. So great. So if you come up to me afterwards, immediate recognition, right? It doesn't matter if I've talked to 20 people before then. I'll be like, oh, you're the lady who asked the question, right? Great. So these are opportunities to stand out. Alajo, she asked a question. And I know Alajo because, yes, we looked at them, right? But now it's like, okay, I'm seeing you again. Top of mind awareness is really important. Oyin mentioned something that is fantastic, which is investor updates. When you've interacted with an investor, even if they've said no, you can say, hey, can I go ahead and share my investor updates with you? It is a great way for us to keep you in mind. It is a great way, even if I don't invest. We all know each other. I'll send it to Eunice. I'll send it to Oyin and say, this company is doing things. Referrals are one of the key ways that we as investors invest. It really still is, because I know that somebody else has sense checked it. Somebody that I've probably co-invested with already has said, hey, this is along the lines of what you like, right? So I think top of mind awareness is a key. Whether it's on LinkedIn, whether it's that you are at different forums, interesting actually, the lady, I don't know if she's still there. I think Ijoma is her name, from SenseStack. She asked a question earlier. And the reason that I remember her is because she also asked a question at a different conference that I spoke at. I don't know her otherwise, okay? So it goes a long way, guys, yeah? With regards to the pitch decks, yeah, I don't know. I'm not as structured in my head as Lexi is, I guess. But I think you have to have a pitch deck, obviously, that A, is sensible, okay? So do sense check it with people. Have sounding boards, okay? Send it to other founders, especially those that have raised before, because they'll know what comes back to you. Send it to friendly investor friends that you have. So if you're friends with Lexi, even if she may not invest in your company because it's not the stage for her, hey, she's your friend, she's going to give you real feedback, right? So sense check your decks so that they make sense. Whether they're blue, green, yellow, I couldn't really care less, honestly. Just don't have all the colors together, okay? It may be a bit tough on the eyes. So just make sure you have real, valuable, data-driven pitch decks out there. But most importantly, when you now come and present, when you have the opportunity, that's when you can really make the difference. Know your numbers, know your answers, know your product, know everything. If I ask you questions and you're stumbling, mumbling through your deck, I'm sorry, you've gotten my attention, but in the wrong way.
Awesome.
Woo!
We have one last question.
Yes, we have one more person. Hello, good afternoon.
Hello, good afternoon. I'm glad to be here, and thank you for the encouragement. I'm actually very unapologetic about taking my babies to tech events and all of that. As a matter of fact, when I came in, somebody initially suggested to me to sit at the back because I have a baby, and I came before the event started. So I said, no, I'm going to sit in front. But if she decides to be a baby, I'll sit by the side so I can just take a walk and all that. I mean, and I'm sure my neighbors can attest that they haven't had any disturbance so far and all that. So I say hello to all the bombers in here. We can do this right. Okay, so for Adincho, my name is Dima. I'm a partner at Catwig and Deal. We're a women-led African tech law firm. We support we offer legal support to tech startups, individuals, and companies in the tech space. So my question now goes to both of you actually, because while you were speaking, you mentioned that some startups come to you, some founders come to you without doing their due diligence, without putting their data room in order and all of that. So typically at Category, that is what we do. We have startups come to us. We help them with their incorporation, putting their pitch together, getting their data room in order. And when we feel that, yes, they are investor ready, at this point, we say, okay, take that shot, right? And we I'm proud to say that we've accorded 95% success rate so far. So my question now is, when startups come to you, honestly, Nigeria, legal is very underrated. People don't seek legal services or legal support. It's only when they get into trouble and all of that. So in situations where founders come to you with this very great idea and all of that, but they don't have their data room in order, they don't have their structure all put together, do you groom them, or do you just ask them to go out, sort yourself out, and then like come back if you wish to, or do you go the extra mile, considering that they have a very wonderful idea? Do you go the extra mile to groom them and all? And if you do, or if you don't, your category and daily is open to receive them. Thank you.
Thank you so much.
So from our perspective, it depends how much of a mess there really is. And unfortunately, I see a lot of founders who... Is this on? Can you hear me? Yeah. It's a bit low. Okay. You can hear me? Yeah. It's okay. I see a lot of founders who early on make a lot of mistakes. So their cap table is a mess. So for example, maybe they had a co-founder who they gave equity to, the founder has left, and now they have a founder with vested 20% equity on the cap table. They have given a board seat to an angel that invested 5K. They've signed clauses that they don't understand, right? I've had one case with a founder in particular where we couldn't invest it because, as much as we loved her, actually, she'd signed a clause that just made it impossible for us to sign. So yeah, it really does depend. In some cases, I've been able to say to founders, I would love to invest, but you as the CEO only has 20% equity because this board member has this, and this silent co-founder that is over there has this percentage, and they've been able to restructure in time. But it's difficult because we're at a time constraint. As I said, over 1,000 applications, 12 we can accept. Sometimes it's a case of finding reasons to say no, because we need to make a choice and we need to deploy that capital within a certain period of time. So I'd say for founders, sort as much out as you can. But yes, then when they come into program, we support them as much as we can. So if they've still got cap table issues, we support them. If they've still got challenges with, I see founders where they have a Delaware company, they have a Nigeria company, they're not linked, the IP sitting somewhere else. So we help them sort all of that because we know they're not going to be able to get institutional investment after us. But I would say for founders, before you take any capital, do the basic homework to make sure your cap table is as it should be. Make sure you don't sign to any clauses you don't understand. There's a lot of research you can get online. Eunice is follow Eunice on LinkedIn. She does great posts, great advice. There's a lot of free advice that you can get out there. So yeah, the short answer is it very much depends how much of a mess it is.
Okay, thank you so much. Ladies, please, a round of applause. I see your hand, but we're actually running out of time. But can we take any more? I'm so sorry. I tried my best. Wink, wink. Please, a round of applause for Ashim and Oyin, and of course, Madam Eunice. They are amazing. They came and they've given us advice. Can we say thank you to them? All right, thank you so much. A round of applause for them once again. Please keep clapping. Amazing.